Good morning, everyone. It's Friday, June 3rd. I'm Marv Eisen of Timeless Dollar. And looking at the economic calendar for today, the labor participation rate is going to be released in just a few minutes. It's just about 8:30. I'm going to wait for that report to be released. I'm not going to see it immediately here on CNBC, but you know where we will see it? We're going to see it right here in my S&P Emini chart, and I'm going to pan over. I guess the market liked the report. Already up 10 points. Good morning. Oh, but look, it did go down 10 points first, so you always have to be careful to jump on. Don't jump on too quickly when any of these market moving announcements come out, because the market tends to do a head fake first, go the other way, then reverse. So let's see. Right now the market is trading within this 3-minute candle. The market has traversed over 20 points. There are 10 points between each horizontal line on this chart. So let's see what the market is going to do. Well, the market, basically, it's gone up, it's gone down. It's basically in a neutral range. Notice that overnight, prices came down from 41.80 to 41.40. So it did some preparatory legwork from 3 a.m. on. Seems to be digesting the news in a positive way, minorly positive way, but of course it's only immediately after the report. So we have a spinning top here. Let me then go back to my morning report. So this was yesterday's S&P E-mini. Again, this is a 3-minute candle, and you see my trading zone. And for those of you who have seen my prior videos, you know that I calculate the trading zone each day, which is the area that the market is likely to trade in. Now, prior to the market open, this was Thursday, remember, on Wednesday, there was a financial meeting in New York, an economic meeting, where Jamie Dimon, the chairman of the largest bank in the U.S., Chase, Jamie Dimon said, the economy is not facing a storm, it's facing a hurricane. So naturally, that would make you tend to think that the market is headed south, right? Well, look what happened. Well, the day opened just at the close of the previous day. I put my previous close right on my chart as a horizontal line, superimposed over my trading zone. Market opened right at equilibrium at the prior day's close. Bounced around between there and my calculated support, and then shot up through my trading zone for the day. A couple of things are significant. Number one, when the titans of industry speak about economic conditions, don't base your trading opinion on what he says, because technically the market is going to do what the market is going to do, regardless of the immediate release of news. So the market did trade according to calculated figures. Now, the calculations that I use are based on the work of George Taylor 75 years ago, and they proved virtually bulletproof in every market that there is. Taylor based his studies on grain markets, but they are just as accurate in equities markets and other markets today, and virtually all professional traders calculate these numbers and use them themselves. And why? Well, a look is worth 1,000 words. How accurate is the trading zone calculation? It's not always 100% accurate. Nothing is in the market, but it's the next best thing to having a crystal ball. And if you don't know how to calculate the trading zone, I tell you how to do it you can buy George Taylor's book, The Taylor Trading Technique. You can get it on Amazon. You can take my course at Timeless Dollar, Trading Mastery for Financial Freedom. There's a link there, and in the course, it tells you how to calculate this. Now, I've got to warn you, whether you buy the book or take my course, the actual calculation is not easy. It's not easy. It's an average of averages, and there are 12 different calculations that go into these two numbers. And there's one number that is support number, and there's one number for resistance. So these numbers are calculated every day. I do it, and all professional traders do it. I am not a professional trader, but I'm pretty good. And knowing these numbers, because the market typically trades according to what these numbers predict. Now, aside of the support and resistance, we also have the range between the two of them. And the range tends to be pretty accurate. The range yesterday between 40.86, the calculated support, and 41.72 was pretty accurate, wouldn't you say? Market traversed from low to high throughout the range. It was a trend day. And so aside of the actual trade setups that you need to know, G, ST, TMC, gap, support and resistance, time and price, trend, momentum, and candlesticks, aside of those, and I teach those in my course, The Timeless Dollar, aside of those, we can use the tools that are available, and one of those is the previous day's close, and another is the trading zone. And this, plus your experience and plus using a lot of patience, will generally do well for you long term as a trader. So let's move over again to see what the market has digested. I don't want to go as far as my trading zone. I'm not going to reveal that. That's available by subscription also, by the way, on my site, if you want to get that. There's a 1 week free trial, so it would be a good idea for you to hop over to my site and get that. Or take my course. So the market seems to feel that the labor report is no surprise, and so it's trading according to it's taking its normal course. At any rate, I like to think that the market is going to continue its upward trajectory. I'm a little bit skeptical of that. But at any rate, we will see. As traders, we have to watch for setups. We have to use our intuition and use our knowledge of trading. Anyway, have a great day. Thanks so much for watching. Marv Eisen from Timeless Dollar, and I'll see you in my next video. And have a great weekend.